Hi there, this is Tina Thompson from the Toma Chamber and Visitor Center. And today I have with me Martha Klatt and Rick Carlson from Ameriprise Carlson Investors right downtown in the new building on the 800 block of Superior. Martha and Rick, I know there's been a lot of information kind of coming at small businesses here regarding the stimulus package and kind of everything that's going on in our new world of normal. We had talked a little bit offline about clarifying what some of those programs and financing options are. Do you think you'd be able to give us a little bit of an update on what you're seeing?
Sure, we'd be glad to. Thanks for having us. So Tina, today Rick and I will go through some of the highlights of the Coronavirus Aid, Relief, and Economic Security, the CARES Act. It is the largest stimulus passed in the shortest amount of time, and it continues to evolve even as we speak. I'm going to start out with the relief for individuals, and then I'll turn it over to Rick. So one thing that you've been hearing about is the recovery rebates for the individuals. So eligible taxpayers will receive an immediate credit for 2020. You will receive up to $1,200 for a single person, $2,400 for a couple that files jointly, and $500 for each child. There is a phase out depending on your income levels. If you're single, after $75,000, they will reduce that amount. It's $112,500 for a head of household and $150,000 for joint filers. The credit is fully phased out for single taxpayers whose income exceeds $99,000 and $198,000 for joint filers. Your phase out could also extend to $218,000 for a couple with 2 children. So there are some different guidelines for it. But your credit is calculated on your 2019 tax return. If you have not filed your 2019 tax return, then they will look at your 2018 return. The amount that you receive is not taxable, and even taxpayers with little or no income can still receive the benefit. Now, right now, you do not need to do anything to receive this check. It will be ACH'd into your bank account, or a check will be sent depending on how you get your tax returns. So ignore any offers to get your check sent faster or anything like that. You do not have to do anything at this point in time. It will just be sent to you. So another area is taxes. The tax deadline has been extended until July 15th of 2020, and contributions to 2019 IRAs and Roths has also been extended to July 15th, 2020. There's been the act is waiving some things in retirement accounts. It's waiving the 10% penalty for early retirement withdrawals of certain related distributions made in 2020, up to $100,000 from an eligible retirement plan. You can pay taxes on this distribution, or you can pay the tax on this distribution over 3 years. Your plan may have additional loan thresholds going from $50,000 to $100,000, but this is not available in every retirement plan, so you will need to check with your employer and the plan sponsor. For this benefit, you do need to meet the following eligibility requirements. The individual needs to be diagnosed with the virus SARS-CoV-2 or with the COVID-19, and you have to have had a test approved by the Centers of Disease Control and Prevention. Another eligibility requirement could be the individual's spouse or dependent is diagnosed with the virus or the disease. And a third qualification could be the individual's has experienced adverse financial consequences as a result of being quarantined, being furloughed or laid off, or having work hours reduced due to the virus, also being unable to work due to childcare restraints because of the virus, or other factors determined by the Secretary of the Treasurer. This year, the required minimum distribution, or RMD, has been suspended. This would include an RMD that normally would be taken by April 1st for individuals who turned 70 and a half in 2019, but only if you did not take the distribution in 2019. If you took the distribution in 2019, you cannot return it or put it back. The relief for RMDs applies to both lifetime and post-death RMDs. If the post-death 5-year rule applied, then the 5-year period is determined without regarding the calendar year of 2020. So that means you just don't need to count 2020 in that 5-year period. If you've taken an RMD within the last 60 days, you may be able to roll it back into the account. For RMDs taken at the beginning of the year, we are still getting information on how that could be handled and if that can be rolled back in. So like I said, rules, some of the information is still evolving as we speak. The law also talks about student loans. The law suspends payments on student loans for approximately 6 months through September 30th of 2020. There's no interest or penalties that will accrue during that period of time. The law also allows employers to provide a student loan repayment benefit to their employees on a tax-free basis. The employer may contribute up to $5,250 towards an employee's student loans, and such payment would be excluded from the employee's income. The new student loan repayment benefit will count against the $5,250 cap that exists under current law for other educational assistance such as tuition, fees, books that's provided by an employer. The new law provision applies to any student loan payments made on behalf of an employee after the law's enactment and before January 1st, 2021. For charitable contribution, the CARES Act allows Americans to contribute to churches and charitable organizations in 2020 by permitting deductions up to $300 of cash contributions if they do not itemize deductions. The law also changes certain limitations on deductions for charitable contributions by individuals who itemize as well as corporations. For individuals who itemize deductions, the 60% or adjusted gross income limitations for cash contributions is suspended for 2020. For corporations, the 10% limitation is changed to 25% of taxable income. This provision changes the limitation on deductions for contributions of food inventory from 15% to 25%. There's also mortgage relief. The law gives consumers the right to request a temporary forbearance on mortgage loan payments for federally backed loans. There is also provisions related to how these temporary forbearances are reported to credit ratings agencies, having them report that you are still current and not delinquent on your loan. The unemployment insurance, the CARES Act temporarily expands unemployment insurance assistance. Unemployed individuals may receive an additional $600 per week payment for up to 4 months. And the unemployment program is also extended to self-employed workers, independent contractors, and those with limited work history. The federal government will provide temporary full funding of the very first week of unemployment for states with no waiting period and extend benefits for an additional 13 weeks through December 31st of 2020. There is a health care provision that the law allows a high deductible health plan with a health savings account, HSA, to cover telehealth services prior to a patient reaching the deductible. The law also allows patients to use funds in their HSAs and flexible spending accounts to purchase over-the-counter medical products, including those needed in quarantine and social distancing without a prescription from a physician. I'm giving you a lot of information in a short period of time, and it can be overwhelming. Please know that there is a lot of scams and a lot of frauds out there. So make sure that you're talking to your CPA, your bankers, and your advisors for accurate information. Please reach out to us with any questions you may have on any of those pieces of the act. I'm now going to turn it over to Rick, and he's going to talk about the relief for small businesses.
Thank you, Martha. Hopefully everybody can see me. So Martha touched on a lot of the things that are available to individuals. I'm going to talk about some of the features of the act that are available to businesses. One of the big one that you maybe have heard of most recently is the Payroll Protection Paycheck Protection Act. PPP is kind of the acronym for it. It went into effect today, so there's been a lot of discussion about it. You probably heard on TV in the press conference last night. It is about $350 billion is going to be made available to small businesses. This is something that every small business should look into. It's available to any small business with less than 500 employees. These can include sole proprietors, independent contractors, self-employed people, private nonprofit organizations, as well as 501c19 veterans organizations. That's obviously in addition to a typical small business, which might be a S Corp or a LLC, et cetera. So what does this feature provide? So what it's designed to do is allow for employers to get a loan against approximately two and a half months worth of average payroll, as well as benefits. And if they adhere to a couple of things, those dollars will be forgiven, or a portion of them will be forgiven, and that forgiveness will be tax-free. So this is a big deal from the government to help small businesses. For the small businesses like the LLCs, the sub-S's, those can be filed starting today. So you're hearing a lot about that. There's kind of a rush to get these things going. For independent contractors, self-employed people, as well as sole proprietors, that goes into effect next week. So you'll want to watch the SBA website or talk to your lender, but that will be coming up next week. So, you may have a business at home, you're just self-employed or a sole proprietor. A lot of times these things weren't available, but this program is available to you. So again, it's based on payroll, and it's designed to allow you to continue to pay your workers, or to bring them back quickly once this is over. Also to continue to pay rent or pay interest on your mortgage, as well as utilities and a couple of other things. Technically, the loan has a 2-year maturity, and the interest rate is 1%. But again, for a large number of employers, these very well could be and will be forgiven. And the way the forgiveness works is that basically they're gonna look at your payroll during the period of once you get the loan going out a couple of months. And to the extent you can maintain that, obviously that will help with the forgiveness. And they want to also make sure that 75% of the proceeds go for covering payroll, while the other 25% can go to rent, utilities, mortgage interest, etc. So it's important, though, to know that you don't have to necessarily maintain all of your employees during this period. It is to maintain them and or bring them back quickly, okay? And so you want to look at that closely, but for a lot of businesses, this is an opportunity. I mean, this money's going out. They'll get through that 350 billion, I suspect. And for a lot of businesses, it may end up being a tax-free benefit to that employer to help him or her with their employees, as well as their other expenses. What I would say on that is make sure you process these through your lender, through your banker. So even though the application is out on the SBA, it's being processed by the banking industry. So If you haven't already, make sure you reach out to your local banker and get going on this if you're interested. Obviously, we have information on that as well. So that's a really a big thing. And, you know, we talked about small businesses; they're going to be impacted by this. So make sure that you look into that. In addition to that, there are a few other things that were added to for employers. One of them, for example, is the deferral of employer Social Security tax. One thing I'll make note of is that with some of these, you can't do that triple P that I mentioned a minute ago and some of these others at the same time. So, for example, deferring employer Social Security tax, you can't do that as well as the triple P loan. So your business has to kind of decide what's more effective. But what basically the government is allowing is for you to, if you think about the employer share of Social Security at 6.2%, that the employer has to pay on payroll. That is being deferred from March 27th through December 30th of this year, with half of that deferral due by the end of next year and half of it due by the end of 2022. So there's really no forgiveness there. It's basically saying, you know, we understand that can be a big number. We're going to allow you to defer that this year's amount into next year and the following year. But again, it can't be used in addition to the triple P loan program. So it may not apply to everybody. Same with the other one, which is what's called an employee retention credit. So for businesses that had their operations fully or partially suspended due to the COVID-19 shutdown, or if their gross business receipts declined by 50%, whether they were shut down or not, and you're going to be able to get a credit for the employees that you have or that you maintained throughout this process. If you have more than 100 employees, then they limit that compensation or that credit to $10,000 per employee. But if it's less, it can be higher. So again, there's that credit. You know, when they talk about a tax credit, that means that's not a deduction. That is a payment. So businesses would want to look at what would be the benefit to them more so. Would it be this one that I just mentioned, which is the retention credit, or the triple P? You know, if your business is shut down and it's a significant business, well, the employee retention credit may be the better solution for you. So those two things, you have to be careful of kind of which path you choose relative to the triple P loan. There's some other features out here, which, you know, I won't get into a lot of detail on because they get fairly complicated, and it's really something you want to make sure you talk to your accountant with. But one of them would be reinstatement of net operating loss carrybacks. So what happens is the tax law that was signed last year limited the ability of a business to incur a loss in the current year and take it and apply it to previous year's income. And basically they can amend their return and reduce, you know, get a refund for previous tax returns. That was not eliminated, but it was reduced a bit, a fair amount in the tax law last year. They're now opening that up again for some of these net operating loss lookbacks. I believe it goes back at least three to 5 years, roughly. And so, you know, if you have a big loss this year, you know, you may be able to go back and say, well, I had quite a bit of income in a previous year, and I want to apply it to that, and you can get a refund for a previous year's taxes. So again, when you start getting into net operating losses, that's definitely something you're going to want to talk to your accountant about. There's another one here that I'll talk about, business interest limitation, for example. The tax law, again, limited the amount of interest that a business could deduct. They are relaxing some of those restrictions. So if you're a business with you may have debt, with a fair amount of interest on that debt, and you were limited by the tax law, there may be some opportunities now for you to to be able to deduct more of the interest on your debt as a result of this act. So again, interest limitation being reduced. The other one too is bonus depreciation. So there was a slight mistake or an oversight in the tax law last year, which they call them qualified improvement property. It reduced the what it did was it extended the depreciation schedule out to 39 years, which means it takes a long time to get that deduction for the depreciation. This act kind of made a change to that and allows that to be accelerated to something shorter. So again, if you may have been limited, if you've done some capital improvements within the business, then you may have an opportunity to take more of a write-off this year against interest than you were after the passage of the Tax Reform Act. So, to summarize, it's an unprecedented bill, as Martha mentioned. And there's a lot of things in there for individuals. There's a lot of things in there for small businesses. And there's also a lot of things in there for big companies. We've heard about, some money going to the airline industry and some of those things, but small businesses are an important part of the economy. And we want you to be aware that there are a lot of things in this bill, and some of it's fairly complicated. So you should be talking to your accountant. You should be talking to your lender on some of these things. And as Martha said, we're available as well to answer questions and give you some thoughts, but for sure direct you in the direction you need to go based on kind of what your needs are. So I hope that helped you. Like you said, it's fairly complicated, but hopefully gave you a little bit of an insight and some ideas going forward. And like I said, if you're that triple P one, I would get going on that sooner rather than later. So with that, I'll turn it over back to Tina and see if what she has to say.
Sure. So first of all, thank you for breaking a lot of that down. I think there's so much information that's flooding at people that it's almost overwhelming to try and decipher it, both on an individual level and as a business owner or somebody that's running either trying to run a small business or a large business at this point. I just think it's confusing, it's complicated, and we're just all being barraged with information, and trying to filter through that has been a challenge in its own. I mean, most people probably don't realize we are two separate companies under one roof, 501c6, so don't qualify for the triple P plan. So it's a little bit complicated even on our end trying to figure out what to do, much less trying to explain it to others. So I really appreciate you guys kind of breaking some of this down for us. Anything else that you guys can think of that we should add or further explain to people at this time?
No, I don't think so. Just let us know if there's questions, or if something comes up, don't hesitate to shoot it our way. And we can certainly, if we don't have the answer, we can check our resources and find out the answer and get back to you with the information. So like you said, there's a lot out there right now. So, just reach out to the resources and let us help you.
Yeah, and just a quick shout out to all of our local accountants and CPA firms right now. I know that not only are they trying, thank goodness the tax deadline was extended, but not only are they trying to still process, taxes for people, but now this whole confusion and barrage of questions is kind of coming at them as well. So we'll keep them in our thoughts for sure. I appreciate, Rick, you mentioning small businesses. We're all in this together, but our small businesses are getting hit hard right now, especially. So just anyone that's out there, if find ways that you can support them if you still can, and just keep everybody in our kind of thoughts and prayers here. So
what I would say too on the small business side, we've all been affected by this, okay, one way or another.
Yeah.
And the CARES Act is designed to help all small businesses with this, as well as hopefully all individuals. So make sure that that everybody looks into these things, because this money is going out, and it's designed to help everybody. So take advantage of it.
Absolutely. Good reminder. At this point, then, I'm just going to thank you both for your time, and I'm going to end the broadcast portion. So hang on there 1 second. Thank you for everyone that was listening. And certainly if you have questions, please reach out to your resources and ask those questions.
Thanks,
Tina.